Hey everybody, today is April 25th, 2025, and today we're going to talk about the stock market and where I see the stock market headed for the month of May. Before we begin, please read the disclaimer. You can pause the video as you read it. Okay, so where we left off last time was around here in late March, and I basically said that, excuse me, that it was very important for us to hold the 200-day moving average, which is this blue line, right? I think we're around somewhere around here. And we had been staying below the 200-day moving average for a while now. And I said that it's important because this is an important long-term moving average, right? This is a moving average that a lot of professionals look at. And I also said that in the longer-term trend, we are still in a secular bull market from the 2009 financial crisis low, right? And once in a while, it's healthy to have pullbacks that touch these long-term moving averages, the silver line being the 50-month moving average, right? And we'll get back to this chart later. But the point is, I said in my last video that it was important to hold the 200-day because, you know, this is one of the important long-term trend lines that, you know, if we're not able to hold it, it generally signals a deeper fall, right? And that's exactly what happened, right? We sort of went up the stock market, the S&P, and it got rejected on 200-day, and then it kind of just bounced below. And what happened was, of course, in early April, President Trump released his reciprocal tariffs, which were a lot more extensive than people expected, and it lasted a lot longer, right? And then we saw this huge, just, you know, panic sell-off, right, risk off, and we saw just volatility that we haven't seen since COVID, right? And so we saw the VIX just rip up to, you know, 60, although it is coming down now, right? So what happened was, after some time, the president did announce a 30-day pause, or sorry, a 90-day pause, except for China. China is not budging at all. So with China, they're still in the process of negotiating, but I think it's going to be a slower, more drawn-out negotiation. But I am optimistic that they're going to come to some deal. I mean, it does seem like they are starting to like negotiate some concessions. Maybe take some, like Trump a couple weeks ago said that he's going to exempt certain electronics like laptops and phones from the bans, because this would be really bad because a lot of like electronic manufacturer like Apple, they manufacture, you know, the iPhones in China, right? The Foxconn warehouses, right, in China. So yeah, people are saying like, oh well, you know, if we move manufacturing here, it's gonna cost so much because the cost of labor is a lot higher, and the phones will be like $3,000-$4,000. And so Trump, I guess he kind of gave into that, and so some concessions thrown out there, right? Now China, there's rumors that they're thinking about having their own like exemptions as well. So I think it's going to be like a tit for tat, slow process that eventually I'm optimistic it'll fall through. So basically how this is reflected in the market is that we had this initial plunge down, went up, typical short bears came in to try to push the price down. But in the short term, we're making a higher low, right? Which is good. Now what we need to do is we need to fill this gap right over here. And then we need to like reclaim these moving averages, right? Which is crossing down right here, right? 50 over 200. So in the short term, we want to come up, fill this gap. We'll probably get rejected at the 200 again, right? Because this rejection was just a huge plunge in validation, right? So probably rejected, take some time to push up higher, right? So I think that this is going to be what we see for the month of May, is we're going to see the stock market recover, face some resistance around 200, kind of grind around it before pushing up higher, right? And I actually think that sometime this summer, we might see a deal between China and the US, right? So, and that could lead us, surprisingly, to new all-time highs by the end of this year, right? But yeah, let's look at the bigger picture. So the bigger picture actually looks pretty good, right? If you look at the long-term view, right? This is the weekly chart. Like I said, it's healthy for the price to come back down and retest these long-term moving averages, right? Because that keeps the line in check. It keeps the trend more stable, right? Whenever we see like a huge breakout, it's like a band-aid, right? It tends to like revert, like mean revert back and sometimes it'll overshoot, right? Like we saw over here, it kind of overshoots the downside before correcting, and then in 2021 we kind of went up a little too quickly, then it kind of corrected again, right? And so this is sort of like this gyration, this sort of like seesaw, right, where it just goes back and forth. And if you can time it rightly, you can, you know, do very well in the market, right? And so that's sort of what we're seeing right now. And this is something that kind of like I sort of noticed that last year while I was making these videos, like we were kind of going up like pretty quickly. We hadn't come down to test these long-term moving averages, right? And it kind of reminded me of this. And so I'm kind of relieved in a way that we're coming down a little bit and we're sort of resetting the oscillators, right? You look at the weekly chart. We've come down to test to go below the 30 RSI, which is usually a good time to buy in, right? This means it's very oversold. And last time we had this was during COVID, and we saw what happened, right? This epic V reversal, right? So the fact that we haven't come down as far, we haven't broken down the 200, we haven't broken below the 200 week, right? Which is really bullish, right? We came down here in 2022 and bounced off of it and went up higher, right? We've only come down to the 100 week, and we're bouncing off that. So if we're able to hold this, reclaim the 50 week, I'm very optimistic that we're going to go up higher and reclaim the all-time high by end of the year, right? Monthly chart, again, this is very bullish. I mean, just look at this shadow, right? Look how massive this wick is. So this is what we call a hammer reversal pattern, right? This is when the price plunges, but the bulls come in late to push the price back up, and you see this huge wick right here, this huge shadow, right? This is all this loss was reclaimed, and if we close the month, which closes in a couple days, around this level, this is to be very bullish, right? This is usually a reversal pattern that leads to higher prices. So again, a lot of volatility. VIX looks like it's coming down, right? Let's look at the dollar. Dollar has been tanking, right, on this tariff war, and a weaker dollar is usually inversely proportional to the market. So risk on assets like stocks, crypto, stuff like that is going to go up. Also, gold has been going on a tear, right, hitting new all-time highs, just hitting 3,500. Now it's pulling back a little bit. It is like going parabolic at this point, right? Look how overbought gold is, right? Look at this RSI 85, right? We haven't been this overbought since the 1980s, January 1980, right? That's 45 years ago, right? So this is a very interesting market right now. But yeah, that is my technical analysis. I'll get back to this at the end of the video, but let's look at some of the data, right? So inflation, again, we had a lower print, right? CPI for the month of March. So we're starting to see a trend to the downside, right? We late last year, we saw a trend up, right? So this was a little bit worrying, but we sort of peaked in January, so we are coming down now. So this is good. What the Fed wants to see is we want to see the inflation CPI rate go down to 2, right? That's their target goal. And as long as it keeps trending down, the Fed is more likely to cut, right? Part of the reason why the market turned down earlier this year is sort of like right around here, right? Right before the whole tariffs capitulated, right? The market was that a lot of people, they started to readjust the amount of rate cuts that they were expecting. A lot of people thought that this year we're going to have multiple rate cuts, like 4 or 5. Then it sort of got adjusted to 2, right? As we sort of saw like, hey, we might actually be entering a recession a lot faster. And if you've been watching my videos, my past couple of videos, I talked about the recession risk, right? I brought these two charts, right? The 10, 2-year yield uninverting, right? Usually when this uninverts, this is going back to 1980s, we followed by a recession, right? And I said that we might get a recession sometime, maybe starting late this year. And my target was like 2026, right? Same thing when the Fed starts to lower rates, after elevated rates, it tends to be followed by a recession, right? The shaded area, right? Last time we had around here, right? 2020 COVID. So this is one of the headwinds that I was talking about, right? So again, these are one of the risks that I was saying, that we might actually have a recession risk, and the market might actually be selling off ahead of that, right? Because the market is forward-looking, right? So again, this is something to think about. We actually might get a recession a lot sooner. I thought it was going to be sometime in 2026, but it might actually be a lot sooner. Again, I don't think it could possibly be more of a shallow recession, in my opinion, because it seems like these last couple of years, with the price of everything just going up and the cost of living going up, we sort of have this like silent recession. And yeah, I've been talking about this for the last like year or two in my videos. But I think that this recession that everyone's like thinking about, right, talking about, it probably will be a lot more shallow than we expect. And especially if Trump is able to, negotiate a deal, which I'm optimistic, by the end of the year, I think the market can actually recover, go to all-time highs, and either we avoid a recession or we have a delayed recession sometime next year, and perhaps it'll be shallow like we saw during COVID, right? But yeah, for the most part, that's it for this video in terms of the excuse me, fundamentals and the technicals, right? So just to summarize, we had a plunge because, of course, we had the trade war with the world, basically, right? But the market is looking really good, actually. We're making higher lows for now, but we have to continue grinding higher, right? We have to fill this gap, and we have massive resistance at 200-day moving average, which will probably be around 560, 570 level, right? So I think we're going to spend the next month, obviously, going up higher, probably rejected here, and pull back down a little bit. And we're just going to grind sideways for a while before pushing up higher, in my opinion. But if Trump is able to negotiate a deal, I think the market will rip up a lot higher, right? If we can negotiate a deal with China, that's going to be like massively bullish, right? And other thing is that we want to see inflation rate coming down, right? If it comes down, the higher probability that the Fed will cut. And Donald Trump, he's not supposed to, but he's putting a lot of pressure on Jerome Powell, the Fed chair, to cut rates, right? The Fed's supposed to operate independently. And of course, we got to look at potential headwinds, potential recession, maybe sometimes late this year or next year, right? 10 in 2 year uninverting, right? Same thing with if the Fed does continue to cut rates, this could be followed by recession. So just something to think about. That's just my video for this month, for the month of my prediction video for the month of May. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.